Good morning, everyone. I want to welcome everyone participating in today's webinar, which is a training on management's responsibilities under SAS 136, as well as some overview of DOL Cybersecurity best practices. My name is Jennifer McCahill. I'm an audit partner here at GRF CPAs Advisors, and I will be today's session moderator. I'd like to start off with some quick housekeeping items and explain what you will need to do in order to earn CPE credit. Participants who are seeking CPE credit today must complete and submit a short survey evaluation. It will automatically appear following the webinar. You'll be asked to recall 3 words that we give out throughout the webinar in order to receive credit. So if you are seeking credit, please make sure you write down these CPE words when they are given and hold on to them until you receive your certificate. They will not be provided again. If you have technical questions or issues during the discussion, please use the chat function to speak with our administrator for assistance. The slide deck from today's webinar recording will be available on the events page of our website, or you can reach out to me directly and I can send it to you. And technical support and CPE questions can be addressed to Nathan, whose email is up here on the screen. Today's learning objectives is to provide attendees with industry updates, guidance on the 2021 changes, and ability for preparation to implement management's responsibilities under the new SAS 136 standards for those retirement plan audits. I will now introduce our speakers for today's webinar. Starting with Matt Willard, he is a risk advisory services manager at GRF with almost 10 years of experience in the accounting field. Matt speaks at a number of professional seminars relating to auditing, enterprise risk management, fraud examinations, and information systems control and security. He is also the Associate Vice President of Programs for the Washington, D.C. chapter of the Institute of Internal Auditors. We also have Sarah Glynn, who is a manager in the nonprofit audit department at GRF with over 20 years of experience in the public accounting industry. Ms. Glynn has extensive experience with audits of employee benefit plans and internal control testing. Here's a brief agenda of what our objectives are, what we will cover today. Obviously, the biggest reason we wanted to provide this webinar was to give some specific training on the new standards under SAS 136 and directly how those will impact you all as the plan administrators. So we will be starting with that, followed by some cybersecurity best practices for your retirement plans with Matt. So let's go ahead and get started. And before we get started, we are going to kick it off with a quick polling question, just to take some pulse out there to see how familiar you are or not familiar you are with the changes under SAS 136. So we're asking here, are you aware of those changes to the limited scope audits under SAS 136? Yes, no, unsure. And at this time, we'll actually go ahead and provide the first CPE word right off the bat. So if you do want CPE credit, the first CPE word is employee. Please write down this. You will be asked to complete in the survey following the webinar. So again, the first CPE word is employee. And I see that all of you have gone ahead and answered. Most of you have not heard the changes. That's okay, not a surprise. That's why we're here. We want to bring that information to our clients in case you are unaware. So we will be going over the most significant changes, SAS 136, but you might be familiar with what used to be called a limited scope audit. That has changed. And so I am going to hand it over to Sarah, who will go ahead and get us started with the actual details for our presentation.
Thank you, Jennifer. My name is Sarah Glenn, and today I will be discussing SAS 136. The new standard is applicable for all 2021 benefit plan audits. Going forward, I'm going to go over some of the changes that have come about under the new standard. And first and foremost, probably the most important and biggest change is that the audits formerly known as limited scope audits will now be considered ERISA Section 103 A3C audits. I will be referring to these audits as ERISA 103 audits. These audits are no longer considered to have a scope limitation, which means the auditors will no longer be issuing a disclaimer of an opinion. Instead, the auditors will be issuing a two-part opinion. The first part will go over the audit, and the second part will go over the procedures applied to the investment certification. With the removal of the disclaimer of opinion and limited scope audits, now many of us will no longer need to start an audit committee or a board meeting with explaining what a limited scope audit is and why a disclaimer of opinion is okay for a benefit plan audit. It is not surprising that under SAS 136, they've also enhanced the procedures that need to be applied to this investment certification. And under the new standard, the plan sponsor is required to do an assessment and analysis over the certification. Us, the auditors, will request a copy of management's analysis, and we too, the auditors, will be performing our own procedures over that analysis. Luckily, the ASCPA Employee Benefit Plan Quality Control Center has created an extremely helpful tool to help management make that assessment, and we'll be going over that in detail in a few minutes. So, related to that two-part opinion that I discussed, the auditors will now be reporting on specific plan provisions and whether the plan has complied with those provisions, so that the auditor's opinion under the ERISA Section 103 audits will look quite different than the limited scope audits in the past. Under SAS 136, they've also clarified and expanded the plan sponsor's responsibilities as well as the auditor's responsibilities. The plan sponsor is required to assess whether the certifying institution is qualified. And again, we will discuss this in more detail in a few minutes. The plan sponsor is also responsible for the certifying the investment information and whether the appropriate measured, presented, and disclosures in accordance with the applicable reporting framework. The plan sponsor is also responsible for maintaining our current plan document and amendments, as well as maintaining sufficient participant records. Back to the second bullet point, the plan sponsor is responsible for the certified investment information, and that is appropriately measured, presented, and disclosed. What does that mean? It means that the plan sponsor is responsible for responsibilities does not end when they receive the investment certification. You are required to understand the measured basis used to value those investments, and that's particularly true of those alternative investments that the plan holds. Management is required to have a fair value measurement analysis over all the assets held by the plan. And when it comes to those alternative investments, management may need to reach out to the certifying institution to obtain additional details on how to value those assets. In some situations, you may need to request an amended certification to either cover those investments or to exclude those investments from the certification. And if there is a situation where investments are excluded from those certification, it is management's responsibility to engage with an auditor to have those investments audited. Now, the auditor's responsibilities are to communicate reportable findings, and these findings include issues of noncompliance that could be noncompliance with the plan provisions or with DOL rules and regulations. It could also be indications of deficiencies in internal controls. The auditor is also responsible to obtain and review a draft Form 5500 before dating the auditor's report, which means before the auditor's report goes final, we, the auditors, are required to review the Form 5500 that is complete, and that includes all the forms and schedules that will be filed with that 5500 return. So how do any of the changes affect plan management? As part of the auditor's acceptance and engagement, we will ask the plan management to acknowledge the responsibility for maintaining the plan, administering the plan, and providing us with the draft Form 5500. The most significant change requires the auditor to obtain written representation from management that management has elected an ERISA 103 audit. Whether this audit is permissible, the investment information is prepared and certified by a qualified institution, that the certification meets the Department of Labor requirements, and that the certified information is appropriately measured, presented, and disclosed in accordance with the applicable framework. Okay, on the next slide, we have embedded a PDF of AICPA's Employee Benefit Plan Quality Control Center assessment tool that I discussed earlier. This assessment tool is about 8 pages, and we recommend that this document as it provides some extremely beneficial information. It's quite easy to read. It gives an overview and background of the ERISA 103 audits, and at the end, it has a few questions. They mentioned that the DOL has determined that it is the plan sponsor's responsibility to determine whether an ERISA 103 audit is permissible, which is why they are requiring the plan sponsors to perform these additional procedures over that certification. So exactly what are we looking for when it comes to the certification? As noted on the second page, first off, the certification must come from a qualified institution. A qualified institution is a bank or a similar institution or an insurance company, and the institution needs to be regulated, supervised, and subject to periodic examination by a state or federal agency. Investment companies and broker dealers are not considered to be qualified institutions, but many of them have established trust companies that could meet the requirements to be considered a qualified institution. What does a certification look like? First of all, it needs to be in writing, and it needs to be signed by someone who is authorized to represent that institution. Additionally, it needs to include the phrase complete and accurate. The AICPA assessment tool gives us all the background information needed to make the assessment. And then the tool gives 4 questions to really make it easy to make this assessment. The first question: is the information prepared and certified by a qualified institution, a bank, an insurance company, or a trust company? In some situations, an agency may be provided the certification on behalf of one of these institutions. If that's the case, management is required to obtain an agency agreement and determine that the agent is qualified to represent that institution. The second question is the certification signed by an authorized representative? If there is any question to whether the person signing the certification is authorized to represent the institution, management should reach out to the institution and get confirmation that the person signing the certification is authorized to represent that institution. Third question: did the qualifying institution certify both the accuracy and completeness of the investment information? The certification needs to certify both the accuracy and completion, and it needs to be in that exact language. It needs to state complete and accurate. It cannot certify that just the accuracy and not the completeness, or vice versa. So, number 4, does the certification of the related reporting package include language that qualifies? This calls into question whether the investment information is accurate and complete. Occasionally, a certification may contain some qualifying language, and if that's the situation, it is management's responsibility to reach out to the financial institution and determine whether a new certification is needed to be obtained or whether this ERISA 103 audit is permissible. The next few pages kind of go over management's responsibility as it comes to fair value measurement on the plan assets, and we kind of discussed this a little bit earlier. Management is required to understand the measured basis used to report these investments. Management should have a fair value measurement analysis of all assets held by the plan. And if management has any questions on the fair value measurement of the investments held, I suggest you reach out to the financial institution, as most likely they have already performed a fair value analysis on these investments and can provide some insight. After all the steps are complete, at the bottom of the checklist is a final question. Does the certification meet the requirements of an ERISA 103 audit? At the very end of the assessment tool are some common errors that ERISA has come across when it comes to the certification, and it's definitely worth reading. Provided on slides 12 and 13 are two examples of certifications. In each example, we will ask the question to determine if the investments are properly certified by the financial institution. The first certification we obtained from Principal. The first question, is the investment information prepared and certified by a qualified institution? The Principal certification is 5 pages and it certifies all the investments listed. Pages 1 and 3 are certified by a life insurance company that holds these investments, while page 5 is certified by a trust company that holds these investments. If any investments are excluded from the certification, it is management's responsibility to engage with an auditor to have those investments audited. For example, the participant loans were not listed in the certification, and we will need to have these audited. The second question is the certification signed by an authorized representative. As we can see on pages 1, 3, and 5, all 3 certifications are signed by a representative of the life insurance company and trust company. Again, if there's any question as to whether the person signed the certification is authorized to represent these institutions, management should reach out to these institutions and get confirmation that the person signing these certifications is authorized. Third question, did the qualified institution certify both the completeness and accuracy of the investment certification information? As you can see, as highlighted on pages 1, 3, and 5, the certification state that the financial information is complete and accurate. Number 4, does the certification of the related reporting package include language that qualifies? In addition to stating the financial information is complete and accurate, the certification has documented that the certification applies to 1, the plan being certified. As you can see, it in the plan name is the plan's name is listed. In this case, example client. Also, the plan year that is the certification covers, you'll see for the year end 12/31/2020. Also, these certifications were attached to the plan investment information provided in the auditor's report package. So overall, the conclusion is that these investments are certified by a qualified institution and properly valued as of the date of the plan financial statements. On the next slide, these investments under the Fidelity certification are also certified by a qualified institution and properly valued as of the date of the plan's financial statements. We provided this example because the layout is a little bit different. First question, is the investment information prepared and certified by a qualified institution? The financial reports are certified by the trust. However, instead of listing the investments, the certification is listing the reports the investments are included in. Second question, is the certification signed by an authorized representative? Yep, the certification is signed. Also, the third question is answered as the certification states the reports are complete and accurate. And the fourth question, does the certification of the related reporting package include language that qualifies? Yep, we note that the certification was attached to the reports mentioned in the certification and includes the plan name and the period the plan covers. When evaluating the certifications of your plan assets, we suggest you use this AI CPA assessment tool to make your analysis easier and straightforward. Again, I also really recommend you review some of the common areas listed at the end of the assessment tool report. Especially if you are changing plan custodians or trustees during the year, you'll see at the very top, no certification or incomplete certification. These common areas will provide good insight on what to look for when you're reviewing your certifications in those situations. Also, if you look at the omission errors and qualified language in certification, review those common errors. As you'll see, I think if you make sure your certification doesn't have those errors, you'll do pretty well. And as you'll see, we've covered a lot of these in our example above. For example, does it include the plan name? Is it signed? And that's pretty much it. Jennifer?
Great, thank you, Sarah. I'm going to flip back to our presentation. So as Sarah mentioned, and I mentioned at the beginning, these will be posted on our website. So you'll have access to download the presentation and then double click on those assessment tools so that you have the assessment tools as well as the examples. I know if you're a GRF client, we've been sending the Word version of those assessment tools in advance of all the retirement plan audits. So you should also have that. You should also have that in hand. And now we're going to flip over to another polling question and then max section. So before we do that piece, there was a question in the chat that I think it would be easiest to answer now. Someone had asked if all organizations are required to have an ERISA audit. So this is, so if you have a retirement plan, they're subject to an ERISA audit after they reach 100 participants as of the beginning of the plan year. You can get around the audit requirement until you exceed 120 participants under what's called an 81-20 rule. So if you have a plan that currently is below that 100 or 120 number at the beginning of your plan year, you don't need an audit to file with your 5,500. Once you pass that number, you will then need an audit. And then we're focusing on what Sarah's mentioning as this 103 audit. There's actually another type of audit you can elect that we're not focusing on because it didn't substantially, this standard didn't substantially change. You could also have what's referred to as, or formally referred to as, just a full scope audit. In this case, it's called a non-103 audit. So there are two options. So once you do pass that threshold for audit, then you have two options for an audit, a non-103 and a 103 audit. We would say 95% of our plans elect this 103 audit because it's completely acceptable. It's a less work on both parties. The certification is usually always there. So I appreciate just asking that question because that kind of backs us up to some of the basics on when you would even need to apply this new standard. And it is only if you're requiring an audit. And then we have one other question, which I'll address right now. Again, before we go into the cyber things, I think it's easy. So what qualifies as a participant, number of active employees or number of contracts? Yes, that makes complete sense. So participant is technically three things. It's your active participants, so people actively participating in the plan. It's people on your payroll that are not participating but qualify to participate. So they're not even putting money into the plan, but technically they're eligible to participate. They go towards that number. And then the third participant definition is anyone still in the plan that is not a current employee. So someone, could leave their money in the plan for 30 years and not have worked in your organization for that long, but their balance is in the plan. So that also counts. So the culmination of those three amounts constitutes what your participant count number would be. And that's the basis for determination over 120 or that 100 once you reach the audit. So. All right. So moving on, the next slide, we're going to hand it over to Mac in just 1 second. Before we do, we're going to go to a second polling question. We want to, again, take the pulse of who's joining us today and what's out there. So the question being, do you have a formal cyber security controls in place for your retirement plan? And a lot of organizations do this in conjunction with their overarching cybersecurity controls for the organization. So you might not think you have something in place specifically for retirement plans, but it might fall under a scope for the general organization in some way. So while you all are answering that, we're actually going to go ahead and give that second CPE word, which is practice. So if you are aiming to obtain credit, CPE credit at the end of this, please jot down the word practice, PRACTICE, so that you can enter it at the survey at the end. So we have a lot of you that are unsure. That's pretty common. We have some that do have some good policies in place, some that are probably here to learn about what they can do, some maybe baby steps to put some cybersecurity controls in place that relate to your retirement plans. So thank you. And with that, I will now go ahead and turn it over to you.
Awesome. Thanks a lot, Jen. And thank you, Sarah, for walking through those examples in such granular detail. I found that personally extremely helpful. So I'm hoping that the participants also found that as beneficial, seeing it actually implemented in practice. As Jen mentioned, now we're going to talk about some of the cybersecurity best practices as issued by the DOL, the Department of Labor. They have prescribed kind of 12 overarching cybersecurity best practices that we're going to touch on today. And I'm glad that Jen made that point just before starting this. You might have controls in place, and your organization, I'm sure, does have some policies, procedures, cybersecurity controls in place that relate to the employee benefit plan. But a lot of these best practices, really can be applied at an organization-wide level. So while we're here today to talk about the employee benefit plan specifically, and I'm going to try to get into some granular detail on these, I think these concepts can be applied at the organization-wide level. So I'm going to keep kind of drawing comparisons back between, the organization-wide approach as well as looking specifically at the employee benefit plans. But as you can see, the Department of Labor and Employee Benefit Securities Administration are conducting a study over cybersecurity and looking at all of the controls implemented by third parties, being your managed service provider or your third-party administrator, and really trying to understand how the controls implemented on behalf of their clients or the organizations that they work with impact their clients, how organizations rely on those controls and how they need to document those. So currently, there is no formal guidance on what the DOL and EBSA would expect for minimum requirements for cybersecurity controls. And this is very common. We do see in a lot of instances as new guidance is released, there's not a whole lot of granular detail as to, okay, what does this mean for my organization? But as this develops, as these things go into effect, I'm sure there will be more guidance issued by the AICPA, by other bodies such as Checkpoint, CCH, organizations who help put together audit programs or audit procedures. They'll release more information, so you can expect more emails from GRF about trainings and upcoming webinars to explain these types of things. But as it mentioned, there is no specific minimum requirement. However, we do always recommend to our clients that kind of one of the first best steps in addressing your own cybersecurity posture is to kind of pick a framework that you're going to benchmark yourself against. So we do typically recommend COSO 2013 for any US-based domestic organizations. And I'm actually going to talk a little bit about SAS 145 at the end of this. SAS 145 also doesn't necessarily require anything, but it recommends COSO 2013. So going along with that, that also is, just a recommendation under SAS 145, but I'll talk a little bit more about that. ISO is also a great framework to use. That's actually what GRF uses when performing any kind of cyber audit or benchmarking exercise for our clients. Anyone who's familiar with NIST, that's another framework. It's a little bit more robust, granular. There's a little bit more red tape. So we like to think that ISO kind of falls a little bit in between that COSO framework and the NIST framework. It's great for international organizations. Anyone who has their IT assets or employees kind of located all around the world, as opposed to just based within the United States, ISO 27001 is the framework that we would typically recommend to those clients. So jumping into the next slide, the DOL, these new cybersecurity best practices and the study that's ongoing, really emphasizes the fact that management and the plan administrators are responsible for ensuring compliance with the plan. That means all of the cyber controls management has to take ownership of. They have to be held accountable for the administration for understanding those controls implemented by third parties. Again, jumping back to those managed service providers or third party administrators, and understanding how that affects their IT environment, their data, and their employees. So here, we do have a direct link to the guidance. We're going to go through this in a little bit more granular detail over the next few slides. But again, the DOL guidance also gets very granular. Goes into explicit detail over what these certain best practices mean. So I would recommend giving that a read whenever you have the chance. But again, I'll go through these in some granular detail and try to explain what that means and how your organization can implement these and apply these best practices to your operations. So this slide, this is just a little screenshot of the 12 cybersecurity best practices. So I'm going to go through these in detail, but I did try to simplify this just a little bit further by further grouping these 12 different best practices into 3 kind of overarching groups. And that's going to be policy and procedures, risk management practices, and then business resiliency and incident response. So jumping into our first, and then I did just want to, before jumping into those actual cybersecurity best practices, I did just kind of want to again note that, one of the best or one of the first steps that an organization should take is just documenting those responsibilities of management and that of their managed service provider, as well as the third party administrator. Understanding exactly what controls fall under the purview of management, what are we responsible for administering, reviewing, enhancing or improving upon on a regular basis, and then what is going to fall under the purview of our managed service provider, or specifically for employee benefit plans. Typically your third party administrator is going to be the organization that definitely poses the most liability to your organization because of the controls they implement, the data they store, and the importance of everything they do for your employee benefit plan administration. So jumping into the next slide, this just again kind of shows some elements of effective cybersecurity, understanding your organization's context, understanding what framework you're operating on, kind of where your risk or your liability is posed, understanding the size of your employee benefit plan. And again, just kind of that overall level of risk based on your active participants, how many people you have enrolled in your plan, participating, contributing, making changes to their employee information or their elected deferral percentages. And again, making sure that somebody has explicitly signed that role of managing the relationship with those outside parties to, again, just have that additional layer of accountability. And now we'll jump into kind of that first overarching category, which is really the policy and procedure items. So as you can see here, there are 7 out of the 12 that I think kind of fall under that policy and procedure bucket. So this first one here is having a formal, well-documented cybersecurity program. And this, again, this is an organization-wide concept. This isn't something that should just be applied to the employee benefit plan. And jumping back to Jen's point, your organization, I'm sure, does have some documented policies and procedures over acceptable use, information security, but making sure that that has more granular information over the employee benefit plan, going into detail over what the third-party controls are that are implemented on behalf of your organization. That also needs to be included in there. So we always do recommend just performing a baseline assessment to understand, again, what policies you currently have in place, what maybe hasn't been reviewed and approved or updated in a couple of years, what needs to be developed based on your current infrastructure. And if there is any sort of gaps in controls that aren't documented, understanding if this is something that, again, is the responsibility of management to administer, or if you need to reach out to your managed service provider to document these policies. We also do recommend, in a lot of instances, managed service providers or third-party administrators, they can actually provide documentation or some kind of baseline templates that will sort of outline the cybersecurity controls that they implement on behalf of their clients. So, if again, you do have some gaps in policies or procedures, or you're just not sure currently where yours sit, if yours are up to snuff, I would recommend reaching out to those organizations to see if there's something they can provide you that would just save you a lot of time, money, hassle, headache, and also allows you to leverage subject matter experts, the ones who are truly involved in implementing these controls on behalf of your organization, leveraging them to develop those policies and procedures. Again, it's just going to make the process easier and hopefully save you some time and money when developing those and formally documenting your cybersecurity program. So moving into the next point there is number 4 is clearly defining and assigning those information security roles and responsibilities. This also kind of builds on that first bullet point, is that this is something that should be explicitly outlined within your policies and procedures, outlining the segregation of duties within the IT department, defining who's going to be responsible for managing the relationship with the managed service provider, with the third-party administrator, and periodically reviewing the controls implemented by those organizations. And this doesn't just extend to those individuals interacting with your managed service provider or TPA on a day-to-day basis. It doesn't just extend to the IT professionals within the organization, but it also extends all the way down to the end users. A lot of times we do see our clients, all of the end users or all of the participants, they have access to sign in to the portal to change their elected deferral percentages, change employee information. So that all has a more cybersecurity considerations for it, because if one of your end users clicks on a phishing email and their credentials are compromised, that can then lead into the hacker getting access to additional platforms, one of which being the TPA. So making sure that not only your IT professionals and the ones involved in actually managing the plan are adequately trained and know how to respond to incidents, but making sure that all of the end users are also properly trained. And I'm actually going to go into that in another one of these. But again, that just really emphasizes the importance of phishing training to us, because again, that is the number one way that anybody gains unauthorized access to one of our clients or just any organization systems. It's not typically, when you're hearing about these breaches like Target and Blackbaud and the Pentagon or the casino in Las Vegas, it's not some IT professional who's taking advantage of their position, manipulating data or systems. It's always an end user that clicks on a phishing email and somebody gets a backdoor or unauthorized access to one system, which leads into another system and another application. And that is then how an organization is breached, data is siphoned off. So again, I just want to emphasize the importance of training at all levels outside of just the individuals responsible for the day-to-day administration of the plan. Jumping down to number 5 is having strong access control procedures in place. So that's kind of at the front end when setting up any employees. You want to make sure that you're restricting their access based on the need to know basis, meaning that they only have access to folders and systems that they're actually going to need to use in their day-to-day responsibilities. And they shouldn't have any more access than what is required of them. Again, just making sure that there are no unidentified access points to any sort of systems, that nobody has more access than they should, that again can just lead into more systems being corrupted in the event of a breach. And then going forward, making sure that somebody has the responsibility to actually review those access rights. Unfortunately, that is kind of one of the areas where we see a lot of organizations fall short, is that they have very strict processes for assigning those access rights, but then they don't have a process for reviewing that on a periodic basis. And that's extremely important to make sure that, especially if you have high levels of turnover, or you go through a process where a lot of people were promoted or their responsibilities changed, making sure that you're going through and reviewing those to see that anybody who was terminated during the year, their accounts have appropriately been locked out. Again, there's no unidentified access points or credentials that can be taken advantage of, making sure that everybody has the appropriate access, that someone who was just promoted has access to a new folder or a new platform or shared drive that they're going to need to use in the future in order to meet some of the new responsibilities that have been assigned to them. Jumping into number 7 is conducting periodic cybersecurity awareness training. So this, again, I'm going to talk about the ongoing phishing simulations that we heavily recommend this to all of our clients. At a minimum, everybody should have an onboarding training program, something that goes through the policies and procedures for the organization, outlines some best practices as to how to identify phishing emails, how to report incidents within the organization to the managed service provider or to your help desk, internal IT person, and then having something as an annual refresher, something that's going to cover best practices, emerging issues, go through new schemes or techniques utilized by hackers for social engineering or targeted phishing campaigns. And then I'm jumping back to that ongoing phishing simulations. This is something GRF has done at our firm for years now, and we can speak to the effectiveness of it. You'd be surprised with when people have another hour-long cybersecurity training kind of looming over their head, the amount of extra attention they give to their emails and the amount of participation they have with IT is to actually reporting these, as opposed to just clicking on a link and hoping for the best. Again, that really just helps to emphasize the importance of this, train employees on how to identify those. And in terms of the effectiveness of the control, it really is one of the biggest low cost to high effectiveness controls that you can implement. So if it's something your organization is considering and looking into, again, we would highly recommend it if it's something that's feasible. Moving into number 8, implement and manage a secure system development lifecycle. So this is consistent with really all business practices. You always want to find a way to improve. You always want to find a way to build upon your system, find ways to take advantage of additional functionality, optimize, integrate, and just ensure that you're incorporating all best practices that the organization can. Number 10, encrypt sensitive data. That seems like kind of a no-brainer, but another thing that we typically don't see within organizations is having a data classification methodology. So defining, as simple as high, medium, and low, having all your personally identifiable information, sensitive financial information, that's going to sit in that high risk category. So maybe when you're transferring information or sending documentation, that kind of information has to be sent through a secure file sharing portal, or it has to be sent through an additional layer of encrypted email security as opposed to just through your normal Outlook email. And then something that's low priority, something that maybe is an internal privacy policy, something that's made available to people. It's on the website, it's publicly facing, doesn't have any kind of sensitive information for it. So if somebody gets access to that, it's not going to pose any liability or risk to the organization. That would be something that could fall under low, and that could just be sent out through normal email procedures. But assigning that sort of risk ranking or that priority ranking to the data, and then applying certain procedures to just, again, make sure that any of that sensitive data has an additional security control applied to it, is another best practice. And number 11, again, just implement strong technical controls in accordance with best security practices. DOL obviously has their 12 that they've listed here, but there are all sorts of other organizations that are constantly putting out best practices. Look at the GRF website for best practices. We're constantly putting out content. ISACA, the Information Systems Audit and Control Association, also always putting out great content, and that'll also give you sort of the auditor's perspective and what they're going to be going in and looking at, so you can better prepare yourself for your upcoming audits. There's the Center for Internet Security, there's the NIST framework. All of these organizations, while you don't necessarily have to comply with their framework to a T, they still have best practices that your organization can incorporate to your IT program. So jumping into our next slide, this is going to cover some risk management practices. So 2 and 3, I think, are kind of relatable here. This is almost, I look at these as sort of an internal and an external perspective, where number 2, you want to conduct prudent annual risk assessments from an internal perspective, looking at your existing infrastructure and identifying any kind of weaknesses, vulnerabilities, areas for improvement. Again, building on number 8, which was having that system development life cycle. This just helps you to constantly improve and identify deficiencies. And then number 3 is having a reliable annual third-party audit of security controls. So bringing in an outside consultant to perform any kind of assessment over your infrastructure, review anything that's being done by your managed service provider, and actually building on that. I didn't want to jump back. Managed service providers can, in a lot of instances, help in conducting number 2, having that risk assessment or performing an internal cyber assessment, but it is still a best practice to have somebody independent of the organization, independent of the managed service provider, come in on a periodic basis and perform their assessment as well. So it's kind of, performing 2 different assessments on a periodic basis. And the screenshot to the right, is an example of something that is just kind of an open source information scan that provides a nice screenshot that's pretty easy to digest and understand. But if you click on one of these individual links, it also gets really granular. So it's kind of the best of both worlds from a high level overview and an also very in-depth overview. And this is an example of a software that GRF uses, but insurance providers, banks, they are offering services like this. So again, it might be something worthwhile reaching out to some of your third parties to see if they have these softwares available for you. And then lastly, on this page is ensuring that any assets or data stored in cloud or managed providers is also subject to security reviews or independent security assessments. So this goes into that third-party risk management practice and reviewing the SOC reports for the audits of service organization controls that are probably performed for your third-party administrator, making sure that there's no glaring deficiencies or issues that might impact your decision as to whether or not you carry on working with them in the future. And again, just making sure that there's no significant risk or liability posed to your data, your information, that of your employees or your clients through that relationship. And then jumping into our last bucket is business resiliency and incident response. Again, this kind of goes along with having that well-defined cybersecurity program, is having a well-defined business resiliency program, business continuity, disaster recovery, and incident response. And not only having these clearly defined in policy and procedure, but also educating your clients on these through your training process, making sure that they actually know, where to locate this document in the event something goes wrong. They know the appropriate person to turn to communicate an issue that they're having, to communicate any kind of down systems or issues that they're running into and how they can get back up and running as quickly as possible. Again, if it is feasible, running tabletop scenarios, bringing your incident response team together on an annual basis, getting everyone in a room and saying, all right, the network just went down, what do we do? And seeing how everyone reacts, how they're all if they're properly trained on how to respond to an incident such as this. And then again, just using that to improve, identify any sort of needs for the organization and ways that you can just enhance that incident response plan. And then lastly, appropriately respond to any past cybersecurity incidents. So that doesn't mean just, if something happens, going in, resolving it and getting back up and running. Perform an after action report to understand how that happened, what gave way to this vulnerability, how this was taken advantage of, how it went unnoticed or unreported. And then again, identifying what the root cause of it was, what the impact was, what data, if any, was compromised, who we might need to notify in the event of this. And again, just making sure that you're buttoning things up, learning from that incident and remediating any kind of vulnerabilities or deficiencies that gave way to a cyber breach or a shutdown or any kind of cybersecurity incident. And now that we've talked about some of those best practices, I just want to go into communicating these to the board. And I know we've got about 10 minutes left, so I want to leave a few minutes for questions at the end, but I did promise I was going to talk about SAS 145. So this is just another statement on auditing standards that goes into effect for years ending after December 15th, 2023. And this is really just a requirement for auditors to gain and document a more comprehensive understanding of the IT environment. And now with this SAS going into effect, this does mean that certain IT related management letter comments might take on a heightened level of emphasis within management letter comments. So, we do believe that similar to an accounting manual, lack of having that document that captures all of the finance and accounting controls administered by your organization, lack of an information security policy or an IT manual is kind of taking on that same level of importance, and lack of those kind of documents is something that could be elevated to the level of a significant deficiency or material weakness in future years, again, depending on the structure of the organization and the overall risk associated with the IT environment. So it is important to educate the board on these. The SAS 145 documentation is available online. As I mentioned, they haven't prescribed any kind of minimum security requirements. So we will be releasing more guidance, more trainings and advice on this as we know more, but educating your board on this, so it's something they know to expect. This way you can work that into your budget, understanding that you have to allocate time and resources to developing these policies and procedures, to shoring up your IT and cyber environment, because in a couple of years, this might actually have serious implications to the financial statement audit. And then actually reporting these items to the board, any kind of deficiencies as results of cybersecurity assessments. In a lot of instances, the board is comprised of individuals with varying levels of expertise, skills. So, a lot of times you're not going to have a board that has people who are all the same level of IT savvy. So having something that's a little bit more high level, like that graphic I had shown, that's easy to digest, easy to understand, having that available to just give board members a little snapshot of where the organization currently sits is extremely beneficial. And as I mentioned, you can also go drill down into that and get a little bit more granular in the event you do have someone who works in IT or has a little bit more, IT background and knowledge. They can then drill down and offer their skills, knowledge, and expertise as a board member to provide any kind of additional benefit or best practice recommendations regarding those cyber assessments. So using those dashboards to illustrate the cyber posture and avoid getting too granular or using technical jargon, because that might just go over people's heads. Keep it high level, focus on the high risk, the high priority items, and make sure that something like this is captured in the minutes and that it's followed up on its subsequent meetings, so it doesn't just get reported once and then falls to the wayside. But with that, I think that will wrap up my section. And I'll turn it back over to Jen for the final polling question and CPE word.
Great, thank you, Mac. Really appreciate that. That was really helpful. So we're going to wrap up with a final polling question and our final CPE word. We would love to hear if you were able to have some takeaways from today that you think you'll be able to bring back to your own organization. Most of you have said yes, so we appreciate the attendance and the attention, and glad we could help in some way. While you're answering that, we will give the final CPE word, which is risk, R-I-S-K. So once you close out and exit the meeting, that survey will pop up and you'll be able to enter all three of the CPE words that we have given today to receive CPE credit. Very good. So I know we have a couple minutes for questions. We were luckily able to address some of the questions throughout the presentation. We have a couple questions that often have come up prior to this meeting that we get on these topics. So we thought it would be helpful to share, these questions that clients are asking in advance on these two particular topics. So the first one is the most common thing that we've received in response to that checklist, the AICPA checklist, where there's that evaluation of the certification. A lot of clients have said, is this something that really is our responsibility, or is this something that the checklist, we can send this to the third-party provider to complete? Because most of the questions are about the certification, which is being provided by that third party. So that's by far one of the biggest questions we're getting. I'll give you the technical answer. The technical answer under the standard is that analysis and the engagement of the auditors for that type of audit is a plan management responsibility. So they really wanted management to understand the scope of work that they're engaging auditors for and what the auditors are auditing and what they're not. Now, with that being said, in practicality, oftentimes you might not know the answer to the questions. We tried to give a couple of examples where you can clearly see, it's saying complete and accurate. You can clearly see that it's labeled, they are an authorized signer. We think the questions are generally straightforward. Sometimes you might not know. So I know Sarah mentions that you can most certainly reach out to your trustees to help and verify and answer a question should you feel that you don't know the answer. But at the end of the day, we are going to ask that document is signed off by management, because that is what the new standards say. Another question we often get is just kind of back to the basics, is that certification. Maybe you're unaware of where to even get that. Again, you can always reach out to your trustee, whoever holds your plan assets, or whoever is helping with the record keeping of the plan. It's generally included in that audit package you receive annually from that third party, the trustee or the custodian. So if we had Principal and Fidelity as an example, if you go on your website, Principal and Fidelity both post entire audit packages annually for your 2020, for your 2021 year. And that certification is always included in those audit packages if it's available. TIA CREF is one that includes it, ADP, some of the bigger name institutions that we know automatically send it out with all of their audit packages, and it would be included in there. Some of our clients that are working with smaller, maybe local institutions, that's where we kind of run into what Sarah was saying. Maybe, we need to get clarification on what they're certifying, or, they're not certifying all the assets and what their role is in the whole record keeper process. But if you are with a big institution, it's generally kind of automatically provided. And then for Mac's section, one of the questions we always get is, a lot of the organizations we work with at GRF are small nonprofits, limited resources, and they're always looking for ways to, as Mac mentioned, minimize cost impact. They don't have a budget for a full risk assessment or enterprise risk management or cyber or IT infrastructure within their organization. So like, what are the few things that organizations with minimal budgets to dedicate to IT and cyber, what can they do? I think Mac went over those, and probably his very last slide, the employee training is by far, I think, one of the biggest things, and Mac, you can jump in, that organizations can do, obtaining those SOC reports and documenting what you're doing. So I'll let you kind of address kind of what are bare bones. If we don't have any money, what should we do?
Yeah, no, Jen, I think you hit the nail on the head. Focusing on the policy and procedure development for having everything formally documented, and then training. Training is definitely the biggest one. Again, having those ongoing phishing simulations, or even just training employees on a regular basis as to how to identify phishing emails, communicating those types of best practices. Those are going to be the real low cost but high value controls to implement. And there was one thing that I did forget to mention in regards to those policies and procedures. If this is something your organization has identified as a need, another free resource that you can use is the SANS website, SANS. They have a whole section on information security policies and templates. Again, I mentioned, performing an assessment or using a framework to benchmark yourselves against and understand what documentation or what policies and procedures are relevant to you, and then use that SANS site to use those base templates to pull in and develop your comprehensive information security policy. So again, there are lots of free resources out there, the SANS site being one of them. Also try to leverage your managed service providers or any other maybe IT professionals on your board who have something that they could provide that will, again, just save you time, money, and headaches, to be honest.
Great. Thank you, Mac. I appreciate that. And we appreciate everyone attending today. Always look for resources that will be posted on GRF's website, as well as upcoming webinars. Thank you, and have a wonderful, happy pension season to everyone.